Hello, everyone. I hope you guys are having a wonderful day. And this is Mickey here. I'm just going to be giving you guys another update on what the S&P is doing and what Market Cipher is signaling to us for the coming weeks, months, and days. But right now, we're going to be focusing probably on the short term. As always, Market Cipher still has that red dot confirmation of a potential top on a monthly time frame. So this same signal tagged the bottom right around the October lows, but we got the confirmation a little bit later, right? So again, we topped out essentially back in July, but now we're getting the confirmation in October, right? So funny how that works. And now we saw that the move proceeded for like essentially a 3/4 of the year rally. We are essentially rallying up until July, and now we're getting that red dot confirmation on the monthly. We still have 14 days to go. The red dot is still there, and right now the market is definitely struggling, chopping sideways. It's, in my opinion, right now it's like you want to short every pump, but we'll take a look at some other candles here. So let's focus on that monthly time frame, and right now we have a 10 and a 1. So again, that's a little bit bullish actually. Looking on the weekly time frame, you still got green money flow. You could see the momentum waves are starting to curl in. But if we get some devastating news, during earnings, we have Netflix. I believe we have Netflix and Tesla reporting on Thursday. We also have a lot of companies starting to report now. AT&T, TSM, which is a semiconductor. Again, those semiconductors are really what's driving this entire rally in the NASDAQ, tech, all the hype, right? To me, it looks like a lot of delusion, right? Because, how high interest rates are. And again, the bulls say it nothing matters, right? None of this fear-mongering, negative news matters. But really, interest rates, they really matter. They have a devastating impact on the economy. And obviously, that's in the long term. In the short term, things can go crazy, go out of hand. They can rally towards the upside. As we could probably tell, we've been rallying, from the lows. And now everyone, all the bulls feel vindicated. The bears are beaten up. And now it's, the bears are even starting to fold in and starting to long here. They're buying the dip. They're BTFD, right? Buy the effing dip. And that's what everyone's starting to do. And it's very worrying as, we are on the daily time frame, we have increasing red money flow, right? With this pump that we've gotten, you'd think the money flow would start to recover a little bit and start to go up. But really, it's starting to increase. And that is quite worrying to me, that everyone is buying the dip here and getting ready for new all-time highs. Although that is possible, I fear that a lot of people are not aware of what Market Cipher is signaling. And again, we can see when we crossed into red money flow in the 2022 bear market, right? Essentially, we had that big dump and we got a big pump, right, from the lows to the highs. This was like a 8% pump, and then everyone felt vindicated. We're going back to new all-time highs. And then, I think I charted this out back in the day on the NASDAQ. I believe, let me just get on the NASDAQ chart here. Maybe it was this one. I'm not too sure which NASDAQ chart I was on, but I essentially said like, oh yeah, everyone's feeling vindicated. This is the the bottom. We're going back up. This is it. And then boom, we ran into massive resistance and we just we free falled for weeks on end. And the bears were buying the dip nonstop, and it wasn't doing them any favors, and we were starting to go down. Now we're starting to see the moving averages starting to flip on the shorter time frames, right? So that's starting to show signs of weakness, and the momentum is starting to shift. At the moment, you can technically still buy, right? Buy, but eventually these moving averages are going to all cross over. And then that's probably when, it's going to drop significantly faster. But overall, the 200-day has held as support. And as long as we remain above like the 4,000 levels even, you could still go higher, right? The wave forward could extend and you could still be bullish. But overall, I don't see a point in doing that. I think you're just taking a lot of risk. And again, you don't have to short just because you're bearish. You could still be long or even sit on cash positions. And I think a lot of people on Twitter are starting to, not a lot, but the people I follow are posting and warning people of what could be coming, ahead of time. You can see the moving averages here. The EMAs have already flipped, but you can see, on Twitter, a lot of people are so, they're attacking the bulls and the bears. Haha, losers. I'm so happy you lost money. And then, I'm buying the dip. I can't wait to go to all-time highs and you lose even more money. It's very toxic to see. And I don't know, I don't essentially see why people are being so toxic. It's either you're going to be right or wrong, right? As long as you make money, then that's great. You don't have to be so negative. But right now, I think we're at a pivotal point in the market. I think we need to be on the side of caution. And yeah, overall, I think this is going to be our scenario. We're going to come back up. We're essentially in the beginning phases of topping out in a B wave, and then we're going to extend lower into a C wave. And as we go lower, I do believe that TLT and the yields, right? So we'll just take a look at those, are going to come in. And the reason they're going to start to come in, or the reason the yields are going to start to come in, is because the market's going to be crashing, right? And we're going to go into recession, and that's going to everyone's going to start panicking into bonds. And what happens when you have a huge influx of buyers starting to pile into TLT and bonds, because now the top in rates is in, then you're going to get the yields starting to crash, and you're going to see a massive pump in the TLT and TMF, or even EVA, I believe, or EVA or EAV. Either one. I think it was another ETF that tracks the TLT or something else. It's not EVA. It's more funny buys it on Twitter, but I'll probably find it and I'll post it in the comments. But overall, you're gonna get a huge influx into people buying into the yields, into the bonds, which is gonna cause yields to completely collapse. And we could see this back in 2020 when the stock market crashed. You would expect maybe the bonds to crash as well. But what happened is everyone piled into bonds. Bonds shot up 32%, and right now we're completely oversold on the TLT. Can yields go lower? Yeah, they can. They can go probably back to the all-time lows around 81. But eventually what's going to happen is that regardless, the yields go up more. It's going to put more pressure on the market, and the market is going to start to freak out because the yields are going higher, which is going to put pressure on the Fed to raise the rates. Or the yields spike up, and it's going to be because of a market crash and a recession. Regardless, TLT is not at a bad spot for a potential long here. But yeah, you need to be careful if depending on your risk tolerance, if you want to buy here or wait for lower or dollar cost average. It's all up to you. Do whatever you want. It's just to ease caution here. And looking at the dollar again, we all know the dollar is eventually going to go to zero, but right now the dollar is trending higher. Right now on this month, we have made a higher high. On the monthly, it's looking bullish, and weekly is looking it's actually formed a red dot here, so we actually might get a potential top in the dollar soon. We'll have to see how the monthly plays out, because if this is high is taken out and we continue to move higher in the dollar, and then that's going to be bearish for equities, and we're actually going to see more rallying if the dollar goes down. But if the dollar goes up, then we're going to see more selling. So overall, dollar goes up, you want to be out of equities, and the dollar goes down, you can buy the dip, right? But we can take a look at the DXY and the S&P 500 correlation, and then we'll take a look at the TLT and the S&P 500 correlation as well, which is really something that you want to follow. Looking at the S&P 500, you guys can see when the dollar goes down, we have a nice little rally in the markets. When the dollar starts to trend back up towards the upside, right, we start to see that the market is really struggling. Right now, we got a big bounce. We're on oversold conditions, and the dollar is on overbought conditions as well. So is this where the dollar is going to top out and we start a multi-year downtrend? And then the S&P starts to rally, but eventually starts to crash because of the recession? Or is this the dollar's going to keep going up and equities are going to keep going down, and eventually the dollar going up will reverse back down and the market will keep going down as well, because now we're in such a bad spot in the economy. All right, moving on, we can take a look at the S&P 500 and the TLT correlation. So again, this is something I've been following for a very long time, and again, I've explained this many times, but the TLT can diverge from the S&P, right? The TLT can go down and go down and go down, and the S&P can get delusional, hype and hype and hype and hype and hype and rally, right? But eventually the steam runs out and you start to revert back down. We actually did rally in the TLT here, and the market did the same thing, and we start to crash significantly because we have to correct the entire move because the TLT has moved lower. And we get the same thing here, right? I give you a little bit of a green box rally example when the TLT actually bottomed out and started to rally before the market. So that's actually your signal that the market's going to go up. And in normal conditions, not in market crash conditions. And now we have actually seen the TLT, consistently dropping throughout months on end. And now we're at we're at the October lows here on TLT. We actually found a little bit of a bottom, but the big question is are we going to make a new low? So we can take a look at that very quickly on the weekly time frame and the monthly time frame. So actually the weekly is signaling some strong bullish dual band strength index numbers. So we might get a rally in TLT here. We have a green dot on the weekly. We actually have bullish divergence here on the RSI as well. On this RSI, if you guys take a look at the weekly, we actually have formed a lower low, but we've made a higher low on the RSI. So that's nice to see. And the monthly time frame, however, is not signaling any signs of a bottom yet, although the bottom sometimes can take a while. And if you guys are just waiting on the monthly pattern, you might miss the move in its entirety. So that's why you got to look on the smaller time frames, and you gotta pick, you gotta pick and see if that's where you want to get in. But right now on the daily, looks like we might get a little bit more a downside in TLT, which means we're gonna see more upside in the yields. And then finally, overall, the yields going lower and lower and lower here, and then we've seen the S&P rally, and eventually, we came to a position where the TLT just started to collapse and implode, and then the market, in its delusion and its hype and its AI is going to save us from the recession. It doesn't happen that fast. It takes years to integrate these things. It's not that fast. AI is not going to save us. I think AI is going to be it's going to do great things for the world, but it's not going to happen overnight. Right, and now we're seeing the TLT potentially getting ready to roll over again, which means the markets could be getting ready to start, its next leg down. I would be looking to potentially start to long around 40.80 to 40.40 if you guys are just looking to catch a quick dip. But if we get a market crash scenario like 1987, which by the way, the anniversary of the market crash of 1987 was October 18, I believe. Let me just get on the S&P 500 index, and we'll just zoom out to here. Oops, let me just zoom out. There we go. All right, we'll probably get on the daily so we can see which candle actually printed the market crash. And I lost it. Oh, the 12. That's because I was on the 12-hour. I didn't click on the daily. If I click on the daily, it'll show data from 1987. All right, there we go. So essentially, you guys can probably see here the day the market topped out and crashed the next day, which by the way was this candle was like a 2.81% drop, which is very significant. And then you got another 2, and then you finally came out with a 5, stock market breakers, and then you came down with a 20% crash in a single day. And this was on Tuesday, 13, October 1987. Okay, so we're actually past Tuesday, October 13th. So if we go maybe to the bottom, I think I saw this post on Twitter or something. 20%, 19, 18. Yeah, okay, regardless. In this week, to last week, it's kind of like the market crash time. So we'll have to see if we repeat something like that. I don't know if the conditions are set up for that. We have geopolitical news, but we have a lot of newly more advanced systems, and I don't think the algos are gonna let the market tank that much in one single day, unless nuclear bomb, something like that. But yeah, I wouldn't bank on it. The probabilities of that happening are so small that it's not even worth speculating on. Anyways, hopefully you guys have a good night, and this video helped you analyze the market, and I'll catch you guys on the next one. Peace.